Hello, welcome to another talk on money, business, and investment. My name is Jose. I'm the founder of the company and brand here at Master Investor. Ensure to subscribe to our channel, turn on the notifications so that you know when we go live or upload a valuable talk that can change our finances forever, as long as we apply the knowledge that we're learning from our content here. Also, check out all the links in the description of this audio or video if you're watching us on a live stream right now on YouTube. And if you're hearing this on our podcast, make sure you go to our website, find the link somewhere on the description. We have a lot of tools, resources, and free content that can literally take us to the fast track, right, where the wealthy operate, to give us financial freedom and the tools to build true wealth quickly. We don't have to take a long time to become financially free, right? Because we have the tools, we have information, and we have the ability to sell worldwide and raise capital. So today we have a great topic. It's going to be how to cash flow from inflation. Understanding what inflation is and how to get wealthy from it. Using leverage and protection is key to build true wealth. Any inflation is a form of leverage and protection to the financial educated. Our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today's topic is something that we must master: inflation, because either inflation makes an individual poorer or it makes an individual wealthier. Depends on who we are, right? We are all investing. We are all playing the game of money in this life, and we cannot get away from that. Okay, so we need to master the game of money. The only way to do that is by understanding the new rules of money. Also, we have to go back to the basics of business and investing, and the more we invest, we understand that it requires financial education, because that's how we are able to spot opportunities that others cannot see, because we have the financial knowledge and our financial IQ is much higher. Therefore, we can solve financial problems. Okay, a lot of people cannot solve a financial problem. All they do is work hard for money, and that's how they know how to solve their problems financially. And usually never goes away, because you're in that rat race, chasing the bag and paying for liabilities that are costing people more and more money due to inflation, and people complain about it. So when somebody complains about inflation, it's because they have not mastered this amazing opportunity when we enter any type of inflation, okay? Because there are always opportunities even in down economies, because when people talk about inflation being high, they usually referring to the economy not being good, because it's taking them more money to buy the things that they used to buy with less money. Now, when we invest for passive income and we have the context of the ultra wealthy person, then what happens is that we see inflation as a tool, and we don't complain about it. We cash flow from it. We use it to make us even more wealthier, just like the banks and the governments use inflation to become wealthy. We can duplicate the exact same thing they do, so that we can print money legally like they do. So understanding today's points on this talk is going to change our finances forever. Summary: understand the causes of inflation before attempting to capitalize on it. Do our own study, and don't allow the government's figures deceive us. Hedging and leveraging are the two main strategies to cash flow from inflation. We have made a post a while back explaining why the middle class is doomed. We explain how people who were formerly financially comfortable were spending less and less on necessities due to the growing expense of healthcare. We had already written about the reason we feel and why they are poor. We talked on how middle class salaries have essentially remained the same. Some have made very slight but not significant progress, while low class salaries have decreased by 5% since 1979. Middle class wages have increased by just 6%. The only ones who succeed, extremely wealthy people with a 41% rise in income, passive income, and capital gains income. There will be inflation soon. Inflation, what is it? Let's take a moment to define inflation before discussing how it affects wage growth. Inflation is simply defined as a rise in prices accompanied by a decline in a currency's buying power. It implies that we will be able to purchase less than we did in the past. Every economy goes through periods of inflation and deflation. Problems arise, though, when a population's income levels fall short of or surpass inflation. In that scenario, even if people believe they are making more money, they actually grow poorer. The ones that are financially uneducated, because they're not using inflation is eating their money away that they're working hard for to begin with, and they're paying the highs in taxes, because whoever is operating on the left side of the cash flow circle is the employee and self-employed, which pays the highs in taxes, because it's called earned income what they're making. The type of income that we make determines who we are in the cash flow circle. On the right side of the cash flow circle, we find the business owner and inside investor. On this side, we build businesses, control businesses, meaning that we have a system of systems making us money, doing the selling and selling for us. We control, we oversee operations, we have control over our time, and of course, as an inside investor, we multiply money through sound investing. And that's what we're mastering here at Master Investor, because we all have an investor inside of us. Like I mentioned earlier, we are all playing this game of money, whether we like it or not. Okay, so a lot of people are taught not to talk about money because it's not proper. And actually, that's the wrong advice, and it's probably coming from someone that is working hard for money and does not invest, because the more wealthy we become and the more connections we attract by implementing the wealthy principles, the more we're going to talk about money. We're going to have wealthy friends around us talking about money, talking about growing our cash flow, our passive income. We're okay talking about that, because that means that we have more freedom to spend time with whoever we want at any time of our lives. We have control over our time 100%, and we have the excess of cash flow coming in from our assets, meaning that we have total freedom and we can thrive without ever working for earned income. Even if you love your job, I suggest that we all get to learn how to invest for passive income. That's the message. Invest for passive income, and it requires financial education, and we have to seek that, like we're doing right now, by investing our time listening to a great talk like Master Investors podcast and live streams, and anything that we do here is to better our financial IQ. So rest assured that whatever we produce within our company for our community is to better our finances by taking control over our business vocabulary and investing for passive income with control, meaning that we have control over the company, right? And we are operating like the wealthy do. We control our cash flow, and we use debt. We use OPM, other people's money, the bank's money. We borrow money to make more money. And since that money is not ours, it's tax-free. All debt is tax-free, according to the law. Why? Because money is created with debt. After 1971, August 15, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, fake money, and just an idea backed up by confidence. Then in 1974, the petrodollar agreement was signed, which is being ditched, for lack of a better word. In other words, it's not being renewed at this point in time by Saudi Arabia. That was the agreement with the United States, and Saudi Arabia signed a petrodollar agreement back in 1974, forcing all the countries around the world that wanted to buy oil that they must first exchange their currency into US dollars, making the US dollar the number one currency in the world. Well, guess what? Now everybody can buy oil with their own currency. And I believe they're going to start accepting even crypto. And crypto today is a new money in town. According to US last year, crypto is being accepted as a currency. And it's being recognized by other governments as a currency, like El Salvador, who's, I believe, made their main currency crypto, Bitcoin, I believe. They're working on the Bitcoin. So now we need to adjust. We need to understand the new rules of money. We need to seek financial education daily. We need to be even better than computers in the sense that we're updating constantly. And we're okay with replacing the old software, the old data with the new one. And we can do that constantly, okay? So we have to be able to stay flexible. While low-class salaries have decreased, like I said, by 5% since 1979, okay? And then, the wealthy always benefits from the changes in the laws because at the end, their rules and laws are created to benefit the capitalist, the ultimate investor, or the inside investor, the master investor, right? A master investor is an inside investor, meaning that we have control over the company. That's what an inside investor is. It's someone that knows how to put the deal together, how to attract money, how to raise capital. Exactly what we're teaching everyone how to be and how to invest inside our community, a master investor. We're turning that investor inside of us to a master investor. And it means that we have financial freedom, we have control over our assets, we can use debt to make money through investing for passive income. We can create money from thin air because if we use debt, it's not our money, and we create money with that because we invest it into an asset that cash flows, and it brings money back for us to pay for the debt service, the interest, paid all the expenses, and on top of that, leaves us with positive cash flow. And that positive cash flow, which is a surplus to us, will be treated as a good expense, meaning that we're not going to treat it as an asset unless you decided to do that business for the purpose of paying a liability that we want. And that's okay. We can use that capital as we please because it's our cash flow, it's our positive cash flow that is being deposited into our account from all the profits of each sale, of each transaction of the business, okay? And every investment should be treated as a business. Ultimately is a business. That's why we talk about business all the time, because if we truly want to be a master investor, then we need to talk about business all the time. Why does inflation occur? In an economy, inflation can occur in a variety of ways. Number one, a decrease in supply of a good might result in higher pricing due to rise in demand. This is evident in a hot property market when there are more people seeking to purchase a home than there are available properties. Number two, rising costs for things like labor and materials can result in the increase of prices. For example, a few years ago, hopes became more expensive globally, increasing the price of a six-pack by a few dollars. Number three, inflation is also influenced by the link between workers' pay expectations and rising costs. We refer to this as the wage price spiral. Put simply, it means that workers or employees expect to be paid more when prices rise, which drives up prices. Number four, a fourth method that inflation can occur is if the government prints money or manipulates the money supply, as the US did with quantitative easing following the previous financial crisis. Recap. Quantitative easing is the process by which the Federal Reserve purchases treasury bonds in order to maintain low interest rates. It would be similar to printing money to settle our credit card debt. Which kinds of inflation exist? Although there are many different kinds of inflation, the three primary forms are hyperinflation, walking inflation, and creeping inflation. Number one, creeping inflation. Most economies seek and expect a normal mild inflation, which is known as creeping inflation. The Federal Reserve, for example, establishes policy with the goal of achieving a 2% inflation rate. An economy is said to benefit from this, and employee compensation should be able to keep up. Number two, walking inflation. An increase in inflation in the 3 to 4% range is referred to as walking inflation. People start to feel poorer as a result of this, at least the financial uneducated people. Let me be more specific. And in a community, we're the very opposite. We cash flow from this and they find it more difficult for their wages to keep up. Number three, hyperinflation is extreme inflation that can reach 20%, 100%, 200%, or even higher. A loaf of bread in Berlin that cost around 160 marks at the end of 1922 cost 200 billion marks by late 1923. It's an example of the hyperinflation that occurred under the Weimar Republic. Majority of people shouldn't be concerned about inflation, but should master it through investing. Most people anticipate consumer inflation or the rise in prices of goods, sometimes at a high rate as a result of inflation. After all, artificially low interest rates cannot stimulate the economy by preventing money from pouring into the market and driving up prices for goods. Economics is a really straightforward subject. However, the government is not disclosing that information. Consumer inflation has not increased significantly. Based on official measures of inflation, it is actually historically lower, as the Statistica figure illustrates below. As we can see on a live stream right now, we're sharing our screen. So if you're listening to our podcast, make sure you go to our YouTube channel or any other live stream platform that we are connected with here at Master Investor, so that we can see the diagram that we're sharing. United States inflation rate from 1990 to 2020. Okay, and it shows how it has evolved and so forth. The source is from Statista. I added the link so we can visit the website if you like. And if you want to have these articles via email, then make sure you subscribe to our newsletter. Click the link somewhere on the bio under this video, or talk here. And our website, we have the option to subscribe to our newsletter for free. So it takes you less than 10 seconds to do. And at least if in the future you may not have time for the podcast or maybe watching one of our live streams, then at least we'll have time to read over the article before we go to bed, or even in the morning, or whenever we have the time to study financial education, which is something that we encourage everyone to do on a daily basis, okay? Because that's how we improve our financial IQ. And it's something that we need to take serious when it comes to building our wealth. How is that possible? The first explanation for this is that inflation is occurring, but because of the methodology used by the U.S. government to measure it, it is not always easy to see. There are three kinds of lies: damn lies, and statistics, as the saying states. In this instance, it means that governments can manipulate the data and statistics to tell any narrative they choose. Since 1990, it has been evident from these figures that the administration wishes to portray low inflation. In the past, a constant basket of products was used to measure inflation. This supply basket represented the collectively agreed upon necessities for a decent standard of living. However, as Chatostats.com notes, that formula was modified in 1990 to align with a widely accepted scholarly notion known as the constant level of satisfaction, which was then deemed a true cost of living concept. The common contention was that consumers will switch from more costly to less expensive goods as a result of changes in the relative cost of commodities. By facilitating the replacement of items inside the fixed basket, consumers might achieve a constant level of satisfaction by optimizing the utility of their money. The GDP concept, as it's currently employed, is more suited for this kind of inflation measurement since it measures changing weighting with actual consumption as opposed to the fixed weightings required to calculate the expenses of upholding a constant standard of living. To put it plainly, the statisticians assume that if the price of a steak increased, people will replace it with a less costly hamburger or piece of meat. Instead of tracking the same products every period, this allowed the government to continuously change the goods in the basket in order to manipulate the inflation rate to a lower rate. Why would they act in this manner? In essence, it was a means for the government to save money by, for example, not having to raise Social Security payouts to reflect genuine inflation. It is clear why, when comparing the measurement methods from 1980 and 1990, as we can see, we're showing a diagram: consumer inflation official versus Shadowstat's 1980 base alternate. Okay, year-to-year change through May 2021, SGS alternate CPI 1980 based. Okay, as we can see here on the diagram, is from shadowstats.com. This graph illustrates how inflation has been averaging 10% over the past few years, which is among the highest levels since the 1980s, when the formula was altered. And while the pandemic is ending, or it continues, right? Because now there's viruses everywhere, but as we can see, it is soaring to some of the highest rates ever recorded, heading towards hyperinflation. Naturally, we don't actually need to be informed of this. We probably already know that costs have increased for relatively simple items, in some cases significantly. Yeah, and on the graph, the red line is the CPI-U, so we can see how inflation has been affected, okay, throughout the years. Inflation's effect on wage growth. Regretfully, inflation has wiped out the tiny pay gains of the majority of American workers, according to the Washington Post says. According to a Labor Department study released on Friday, the cost of living increased by 2.9% between July 2017 and July 2018, outpacing a 2.7% growth in salaries during the same time. In the United States, the average real wage, which is a federal indicator of compensation that accounts for inflation, decreased by 2 cents to $10.76 per hour last month. Who is to blame for this rise in expenses? Energy, housing, medical, insurance, and healthcare. Essential requirements. Once more, only those with high income are experiencing pay growth. This is a result of businesses emphasizing to reward highly skilled employees solely with raises, a practice known as the massacre of the Dilberts, according to Governor of the Bank of England, Mark Carney. Regretfully, this is nothing new. For decades, American workers' average income has not increased in line with inflation. According to PEW, after accounting for inflation, the average hourly salary has roughly the same purchasing power as it did in 1978. This is in contrast to a prolonged period of decline in the 1980s and early 1990s, and erratic, uneven recovery in the years that followed. The average hourly wage really peaked over 45 years ago. In January 1973, the rate of $4.03 per hour had the same purchasing power as $23.68 now. Inflation has the effect of making people poor and the financially educated wealthier. Now, since they don't know how to take advantage of inflation to become wealthier, some people view inflation negatively. So usually the people on the left side of the cash flow circle that spend their entire time working for earned income or ordinary income, or we call it also active income, where they're exchanging their time for money. So they're more emotionally and more personal about what happens with inflation. And since they haven't figured out how to invest their money to create passive income and capital gains income through sound investing, then they are caught up in the idea that inflation is bad. When in reality, once we have financial education, we can turn that around and say, you know what, this is a great opportunity to become wealthy and get out of the rat race. As long as we understand the new rules of money, we created an ebook, and also you can get the paperback on Amazon. We have 3 books right now: the 10 new rules of money, how to build cash flow with the internet, turn passive income on, and how to invest in crypto to build wealth, understanding Bitcoin and blockchain. You can go to our website and get the ebooks there, because they come with additional assets, as we have turned each book into a vivid digital course that has assets to emphasize on the topic of the volume. And as we move forward, we will be adding more assets, exclusive interviews with wealth entrepreneurs, new entrepreneurs, and other technology that will help us understand more of the subject of that volume. And whenever we decide to get in, at that point, anything that we add into the course after any other asset will be accessible to the members at no additional cost. So make sure that you get in on this great opportunity, because in a year from now, in 2, 3 years, 5 years from now, the course is going to be worth a lot more, and you want to be able to capitalize on all of those assets at no additional cost. So at the end, it's a win-win relationship, and it's going to be a great investment because it's financial education. And we talked about this before. As an inside investor and a wealthy entrepreneur, we have to have as priority expenses financial education and investing. So the financial uneducated, inflation makes them poor. Employees are negatively impacted by inflation. For example, since they are limited to selling their time, which is not a very good inflation hedge. If there are any raises at all, they usually occur annually after inflation, not before. And there are 2 types of mindset when it comes to money: the poor mindset and the wealthy mindset. The poor mindset has the middle class and the poor class. And then regardless whether the person is a high-paying employee, they still have to show up to work. So if you just have that type of income, or when an individual has that type of income, then they have the poor mindset. And it's good to know, because in that way we can change it, right? And then the other type is the wealthy mindset, and it comes with having the right context. And that's what we're doing here, breaking the context of the ultra wealthy mindset so that we can adopt the core values, beliefs, and the way we approach money. And most importantly, the way we make money. In addition, since the Fed typically boosts interest rates to combat inflation, those with interest on mortgages or credit card debt also suffer from inflation, who have used their debt to invest in liabilities, right? Because we can use debt to invest in assets, and that debt and its interest will be paid by the revenue from the assets in whichever economy and any type of inflation that exists. A large portion of bad debt has changeable interest rates, which increase in inflammatory times and increase the cost of debt payments. Lastly, because they think it is sensible and practical to save money in the bank, the employee and self-employed, the left side of the cash flow circle, the core mindset, Those who adhere to the traditional financial norms suffer from inflation. Those who play with the old rules of money. However, the bank is not stupid. Additionally, the bank abides by the new rules of money and laws. One, on money that doesn't keep up with inflation, they pay interest. When the bank utilizes our money to produce additional money, it loses purchasing power. For the middle class worker, things seem bad everywhere they look. So let's get over the negative and examine some lessons learned from Master Investor about how to prosper in an inflammatory economy. How to take advantage of inflation. We were taught here at Master Investor how to cash flow from inflation by using it in the form of leverage and hedging. And we continue to do so ever since learning this knowledge. As a wealthy entrepreneur and inside investor, we have to master how to play the same financial games that the banks and governments play. We must understand how they create and make money. We may duplicate how they do it to become as wealthy as we wish to become. The point is that we master money and we can use it to become wealthier, which means that we have more excess of positive cash flow and maintain total freedom, control over our time at all times. Once we have excess of cash flow from our assets, that such cash flow exceeds our expenses and still control our time at all times, then we are part of the 3% of the population who experiences total freedom in any type of economy, even during hyperinflation. By taking out a fixed rate bank loan, we use less of our own funds to acquire a cash flowing asset that pays off the debt and boosts our return on investment. If the loan payment is fixed in an inflammatory economy, the dollar loses purchasing value and becomes less of a burden, increasing our income and investments. Our income and investments increase because we buy assets that act as hedge against inflation. For example, rents typically increase in economies experiencing inflation. Our rent increases as a result of inflation when we buy an investment property, but our debt payment remains constant. This increases the cash flow. We just owe the bank the agreed upon amount. They don't charge us based on inflation. We agree upon an amount, and even we have hyperinflation, as long as we're on the right side of the table, we're going to cash flow from that hyperinflation, which gets paid back by cash flow from the asset that we control. So ultimately it's free, as it brings all the capital back that initially we invested and continues to provide us with cash flow even in moments of hyperinflation. And the more money we can use that is borrowed and raised, and as long as the numbers work and that debt gets paid back with the revenue of the business and it still leaves us a surplus, then that debt is good debt. That debt's making us wealthy, and it's also a tax-free debt because all debt is tax-free. So we should use our capital to invest for passive income, but we should also use our capital to raise capital from the banks and from other people so that we can invest with tax-free money. We have to become creative even when we have money. Even when we have excess of cash flow coming in from all of our assets, we have to train ourselves to always invest using OPM as well, other people's money, using debt. Okay? The growing rent payment go directly into our pocket from our cash flowing assets. In this instant, we're talking about real estate property. So we have renters, or we have tenants, right, whether short-term or long-term, and the property is making us cash flow. And when the hyperinflation hits, since we have a loan with the bank that is fixed, is not changing, then we can raise the rents, and now we create a more cash flow from thin air. This also applies to businesses. Businesses can modify their prices and profit from inflation as consumer cost of goods rise. So if we're on the right side of the cash flow circle, are we noticing that we get benefit from all the changes in the law and everything that happens with the economy? It benefits us because this country is built as a capitalist country to benefit the ultimate investor, or known as the ensign investor or the master investor, or the ensign investor, right? That's a capitalist. Capitalist is a master investor, so it's to benefit the one that understands how to utilize the laws, because this country is based on paying the least amount in taxes as possible. So I don't know where people got the financial uneducated think it's patriotic to pay taxes, and it's not. It's patriotic to own businesses and live the American dream. That's patriotic, to have total freedom and be able to represent the country and freedom and what truly freedom means, right? Being able to not worry about working for earned income, having control over our time, and of course having excess of cash flow because we have businesses and assets that are solving problems in the world. And in exchange of that great deed that we're doing, because the more generous we become, the wealthier we are, then we get cash flow. We get positive cash flow, money that comes into our pocket whenever we're not working. Because investors and business owners aren't selling our time, this works. Products that provide a relatively real-time inflation hedging are being sold by them. We have the upper hand. Employees do not control their money. That is in their time, and that is the responsibility of the bank or mutual fund. Neither do they control their product, which is time. We make commodity investments as a hedge against inflation. Energy products like oil have been popular lately. These are excellent investments during periods of inflation, no ideal in the event of deflation. We are therefore not suitable investments for everyone, particularly for those who are still learning about the market and investing and may find it difficult to respond rapidly to shifting market conditions. We have to be prepared for any type of economy. We're not here to predict the economy. We study and we do our due diligence, and we're ready to shift depending on the economy. And we control our assets. That way we can make the shifts as we please and as we should, according to the economy. There will be inflation soon. Which kind? It looks like hyperinflation. We understand that the greatest way to make cash flow from inflation is to invest in assets that act as a hedge against it. We might be mistaken, but investing in different asset classes, including paper assets like stocks, bonds, and mutual funds, instead of saving money in the bank, is safer course of action. Okay, so if you're not going to do anything else but just save money, the first thing we suggest is that we invest in financial education and then begin to invest in different asset classes, not just one asset class, not just have money in your stocks, and if you already have bonds and mutual funds. A lot of people have these fake assets that are not producing any money into their pocket. Now, some stocks can produce passive income, and depending on the strategy that we use. So we need to make sure that we get educated in each asset class and we are comfortable investing in all of the asset classes. That's how we hedge for inflation and protect ourselves from down economies. Okay, is by investing in different asset classes, having assets that produce passive income, and of course some assets will produce capital gains income. But instead of saving money, it's better to have it in crypto. It's better to have it in assets that we know they are going to be here for a long time, and they are a better return on investment than losing money at the bank by saving it. Because three things why savers are losers. Number one, they have to pay taxes on savings. Number two, savings can't keep up with inflation. And number three, it hinders the entrepreneurial spirit. It takes away the creativity of the individual. Okay, saving money is not something that is difficult to do. In fact, it doesn't require any intelligence to do that. Today is directly deposited into the employees' accounts, checkings accounts. And then it goes probably automatically into the savings accounts. So doing that doesn't require any brain power at all, okay? So make sure that we're utilizing any type of capital that we touch to invest for passive income. However, in order to ensure the success of our own investments, we must put in the effort to carefully consider the information and choose whether we believe this approach will be beneficial to us. Take responsibility of everything that we do, that way we don't blame anybody else for anything, and understand that investing comes with risk. But the more control we have over our companies, over our cash flow, over the decision-making process, then we can assure that we have a better opportunity not to only cash flow from any inflation, but to protect ourselves from any liability or any loss. Because as a wealthy entrepreneur and inside investor, we invest with insurance. So even when there's a loss, we're still protected. Ultimately, it boils down to the classic advice from our content. Invest for cash flow, also known as passive income. It is the most sensible and safest tactic that will work for us in an inflationary market. It is a surefire method to get money. It is a surefire method to become wealthy during any type of economy. Let's make this clear. As we mentioned, investing for cash flow is a way we can beat hyperinflation and cash flow in any type of economy. The more the dollars get printed by the government, the more it loses value. Since 1971, when President Nixon separated the gold standard from the US dollar, the printing became a norm. So we are over $34 trillion in national debt as we speak. And it's not going to stop because that's how the economy works. And we can see the graph in other articles that we have published where we can see how much the government has printed and how much it prints daily. And that's what causes ultimately the inflation. Is when the government, is one of the ways. And in this economy, it's caused by that because that's what the government is showing that they're doing. So $34 trillion in debt, and people are complaining about being a little bit in debt. They're complaining because they have bad debt and they're paying for it with their active income or earned income. That's why it hurts them. But we can have any type of bad debt as long as we have good debt, meaning that we have assets that are producing passive income, and that passive income is being used to pay for any liability that we have or that we wish to have. Therefore, the asset's paying for it. We're not personally paying for it. So it's free ultimately. And that's how we become a person that experiences total freedom. It's by investing for cash flow. The only way to make the money, or today's currency, right? Because it's a currency, it's no longer real money. Maintain value is by investing it into a cash flowing asset and moving it from a cash flowing asset to another cash flowing asset. And when we invest it and create cash flow, the surplus of the cash flow should be invested into another cash flowing asset. The holy grail of investing is maintaining and controlling cash flowing assets even after they have brought back all the initial capital we invested. At that point, we will reach infinite return on investment. And we talk about this all the time. This is something that I want us to grasp because this is a breakthrough right here. Infinite return investment is the holy grail of investing. That's when we have an investment that is creating money for nothing for us because we have no money of our own invested into that deal. We recoup the capital back if we had any of our money in that deal. And we control the debt if there's any debt left on it. And if there is, then it's good debt. So we want to control good debt, and we want to have bad debt because bad debt goes with things that we like to have, that we like to experience in this life. And that's why we're creating these assets and acquiring assets so that we can experience anything that we want in our lives. Anything that is legal and ethical that we want to experience in our life, we are going to create an asset that will produce passive income so that we can experience that and we can manifest it all the time if we wish. And at the same time, we help in the world because we're solving problems in the market. So becoming wealth is about finding a need and filling it with a product. And that product has to have a system of systems. And the product is not the most important integrity of a business. We talked about it inside of our content, that it takes following the cash flow triangle, which has the 8 integrities of a successful business. It starts with the mission, team, leadership, cash flow, communications, systems, legal, and product. Those are the 8 integrities, and they are all intertwined with one another, and it must be in harmony with one another. They must be working in alignment, and we must apply them into our organizations to ensure that we will be successful with those organizations. And those organizations mean that they're turning into a real brand. We want to create products that can last generations after generations after generations. People get old. Products can stay updated as much as we make the companies, the infrastructure, update those products. So a company that creates a product can stay relevant for generations after generations. Like companies like Apple, that probably will be here forever, literally. Like Nike and so forth, these companies have the power, and like Master Investor, to last forever to the end of times, because they are built with the 8 integrities that we find inside of the cash flow triangle. At that point, when the asset has brought all the money back to us that we invested initially out of our own pocket, we reach infinite return on investment. It is an asset that has become free and continues to produce passive income, and at times it will create capital gains income for us too. The importance of using debt to become wealthy is crucial to master. Master the cash flow circle, and the side we choose to operate from determines whether we become wealthy or not. Investing and operating from the right side of the cash flow circle will allow anyone to be in cash flow during any type of economy. It requires constant study of money and application of the knowledge we are learning about creating wealth. Investing for cash flow will protect us even during hyperinflation seasons. The economy goes up and down. Therefore, as an inside investor and business owner, we should prepare for any economy to win and take advantage of the opportunities that people who are financially uneducated can see. As we can witness the cash flow circle on our screen right now, we're looking at the left side and the right side of the cash flow circle, where it shows the players that exist in the game of money. And so world's population usually are found on the left side. 97% of the population are working and operating from the left side of the cash flow circle. They don't work, they don't get paid. They're trading time for money. On the right side, we got about 3% of the population. These are business owner, owns and controls systems. Inside investor makes money work hard through sound investing. We don't work, we still get paid. 97% of the wealth is created and maintained on this side of the cash flow circle. On the left side of the cash flow circle is about 3%. As we can see, the best things, because there are people that get paid a lot of money, like athletes, but they're still employees. And so it's only about 3% of the population of the wealth that the left side of the cash flow circle has. As we can see, the best thing we can do to become wealthy is invest for cash flow in assets, and doing so requires us to operate from the right side of the cash flow circle. We must adopt the context and content of the ultra wealthy, which we are doing daily here in our community through self-development and financial education, with actionable steps to create true wealth. As a wealthy entrepreneur and inside investor that we are, we must receive cash flow. What are the 3 E's of a master investor? Number 1, financial education. Number 2, financial experience. Number 3, excess of positive cash flow. Once we thrive from the right side of the cash flow circle and we are paying all of our expenses with our investments, then we are financially free. When we have financial education, then we can see why inflation creates financial opportunities for the inside investor and wealthy entrepreneur. Start investing in high quality financial education. Go to our website, and I hope that you learn what it takes to cash flow from any type of economy. Make sure you reach out if you have any questions, write down any feedback so that we can come back and have a dialogue on that, and use inflation as a tool to become wealthy. Understand how to invest for passive income. It starts with actively investing. It starts by doing the real thing. So whatever we're learning from our content, make sure we apply. So what is going to be the next asset that we're going to acquire that will hedge and that will protect against inflation? And that could be gold, it could be a commodity, it could be a real estate property. There are 5 different asset classes that exist. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. And number 5, commodities. Make sure we do our due diligence and start investing today. In a year, in 5 years from now, 10 years from now, imagine everything that we have accumulated on our assets column by starting today. Take advantage of all of our content. Is world class, and we are the authentic brand of money, business, and investing. Thank you for having me again on this amazing talk about how to become wealthy and create positive cash flow, because the key is in creating and acquiring assets that produce cash flow in any type of economy. And as we diversify among the 5 asset classes, we can ensure that we are going to profit in any type of market, because when the economy changes, we will have assets in different asset classes that are doing even better when the economy crashes. The solution and the answer to financial problems is investing in cash flowing assets, investing for passive income, and of course, investing constantly in financial education. Get our 3 ebooks. The 10 rules of money, how to build cash flow with the internet, turn passive income on, and how to invest in crypto to build wealth. We're working on our 4th ebook. It should be released in the next month or so. Stay tuned. It's called How to Raise Capital to Build Wealth. Understanding how to use debt to become wealthy is a must, and it is also a way to minimize taxes. And as we have learned before, taxes are the highest expense humans have. The financial uneducated pay the highest in taxes. And majority of people are financially uneducated because the school systems are not built to create business owners and inside investors. They're built to create employees and soldiers, at least for now. Maybe in the future the system will change by changing the school board, but I don't see that happening, because we need those schools to create employees that work for the corporations of the wealthy. Maybe in the future there will not be any jobs, except there'll be artificial intelligence and those people who own and control those smart companies. So we need to change. We need to understand where the world is heading to, and we need to catch early trends, because even though artificial intelligence is rising, it's creating new opportunities for everybody. So start investing for passive income. That's the answer to our financial problems, and of course is the answer to protect and be inflation, any type of inflation, even hyperinflation. Bringing you the good and bad news of money, the business principles that work in all economies. Talk to you on the next talk. Make sure you get inside of our digital courses. Visit our website, link in the bio, somewhere around this audio. Talk to you next time. Stay extraordinary and wealthy. Bye for now.